Welcome. Mark David Lamb is your Twitter username to the show. This is actually your second time on the show. I think I've only had a couple people on twice, so thank you for yourself special.
Thanks for having me. Great to be here.
Yeah, for sure. And so let's get right down to business here. And so CoinFLEX is obviously your exchange. You're the CEO of CoinFLEX, and it seems to be a very like advanced exchange from what I know. I don't have a huge like trading experience or like financial background, but you guys are doing a bunch of cool stuff, and the best part is a lot of this stuff involves tokens based on Bitcoin Cash.
Yep, indeed.
So let's check out the kind of the homepage here, and we'll kind of go through some stuff. And so this no token thing is kind of one of the reasons I wanted to bring you on today. It's a little difficult to wrap your head around, so I think we'll get back to that a little bit later. But we maybe talk about Flex token. Oh, we just got a 503.
Yeah, I mean, no tokens are the thing we launched today, so I'm happy to take it however you want.
Sure. Yeah, we can talk about Flex token. So Flex token is obviously the exchange token for you guys. For some reason,
Yeah.
that link isn't working for me. I don't know. I haven't seen that before, but yeah, you kind of want to give us an overview of the Flex token?
Yeah, sure. So Flexcoin is basically the exchange token that powers all of CoinFlex. And so when you trade on CoinFlex, you pay double or triple the fee if you don't pay in Flexcoin. So all the active traders pay in Flex. And basically the end result is we also have a buy and burn program as well. So we take 20% of profits and we burn, we buy or we burn the Flexcoin from those profits. And it's meant to be something that powers everything we do. So as we launch these yield products as well, the borrowers on the note tokens are actually going to have to hold Flex as well. So 1 to 2% of the amount they're borrowing, they have to hold in Flex. And then the fees they pay, they have a certain amount of mandated trading volume. The fees they pay on that have to be paid in Flex. And so everything kind of ties together into Flexcoin. It's also something that can be used as collateral to trade on CoinFlex. So you can pay your fees in it, but you can also store value in it and use it as collateral to make trades. And really every time we roll out a new product, there's some sort of tie into Flex. So as we roll out more and more things, it's always going to be, in some way tied to Flexcoin.
Gotcha. Nice. And of course, it's based on Bitcoin Cash SLP.
Indeed.
And so I think it's the highest market cap SLP right now.
Yeah, that's correct.
So I mean, I guess there's not too many other tokens on SLP to begin with that have actual like use cases right now, and it's great to see people actually like exploring those use cases, which is really cool. Really cool. So yeah, you can post your margin, and then you have competitions as well for Flex.
We do. We have competitions, trading competitions around P&L, around volume, and yeah, prizes for those are in Flex as well. So yeah, there's a whole bunch of things, whole ecosystem around Flexcoin. We also have a kind of a digital options platform, and the bets and the margin, the collateral P&L for that is also in Flex as well. So it's really an ecosystem token. Everything around the CoinFlex ecosystem kind of revolves around it.
Gotcha. Yeah, I actually was. There's a weed lawnmower outside my window. I actually was playing with those options the other day, and it's got a really cool user interface. Let's see if we can pull it up. I may have won some money, then lost some money, but thanks for the mowing. I'll log in a sec, but yeah, that's really annoying me. It's right outside my window. And so yeah,
what is it?
It's somebody. I live in an apartment complex, and there's somebody mowing literally right outside my window right now.
Oh.
Literally never happened to me before during a show, but yeah, and so obviously you get these like discounts when you're holding Flex on the exchange, and I'm gonna log into my options right here, and we can check that out.
As you can see there on that page, the more you hold, the larger the discount is as well. So there's a velocity incentive around if you're a really high trader, you're going to be consuming and buying it every day. but also there's a velocity sink incentive around, if you really want to optimize, you want to hold a lot of flex. So.
Gotcha. And so I did get into the options here. I have 1,500 flex on this account right now, but yeah, these are fun. It's definitely feels it's definitely like short term. I don't want to say gambling, but it kind of is because of how short term it is. But so for example, the tunnel one, say I throw 10 flex, we're on the 15 time frame. Well, let's go to 2 minutes. Let's have some fun. And so basically, if I click trade now, we'll do it 10 flex. And so I've entered this option, and now if it ends, I think above or below this line, then I lose. But if it's in the middle, then I win 10 more flex. And so the return on this one is even, and you can close out at any time if you get scared, but you'd only get 5.7 flex instead of your 10 back. So yeah, it's these are definitely an interesting way to spend time, I suppose. But yeah, it's fun to play.
It's addictive.
Yeah, it's definitely fun to play with it. Yeah, you win big and then you keep going, and then all of a sudden you're down a lot. But it's how it goes, I suppose. But yeah, there's a bunch of other ones. We can keep this open for a little bit, but yeah. So I guess so you can only use flex on this though. Was that like a purposeful thing?
Yeah, that one is pure flex. So for trading on the exchange, you can use a range of margin currencies and P&Ls in USD, but fees are in flex. But for this, everything is in flex. So yeah.
Gotcha. And so that just for kind of to give flex a little more utility, or you just didn't want to?
Yeah, exactly. And it's fun. I mean, the options are more of a game. It's smaller bet sizes. Yeah. It's so it's just easier. If you're using the options, you're kind of part of the CoinFLEX ecosystem, and flex just kind of makes sense.
Oh snap! Got 5 seconds left. We're gonna get it.
Did we get it?
I think we got it. Nice. 10 flex in the bank. I'm not going to show you my history. It's ugly. Oh, there it goes.
There we go.
Don't look at that.
There we go.
But yeah, then there's obviously like over. So if it ends above instead of like the tunnel one, and then there's under, which all have different odds. Which this one is like if you bet 10 and you win, you get 5. 1 to 2 odds, and then high line is 3 to 1. And so, do these odds change over time?
They do. Actually, they're updating and repricing basically with every new bet. So the odds change based on the volatility of the underlying cryptos, and it's really what we're trying to do here is just make a whole wide range of different ways that people can interact with the crypto markets. So some people want to buy spot. We've got spot markets. Some people want to lend out their assets. We've got a whole bunch of different products for that, and we're launching more all the time. We've got perpetuals. We've got quarterly futures, really long dated futures, interest rate futures, and then these options where it's pretty short term, kind of low stakes, high entertainment value, and you can also be the house. So you can stake flex, and you can be the house on the options as well.
Yeah, I was going to ask about that. So that's the bankroller one. I couldn't kind of figure this out. It seems to be like kind of grayed out for me. But yeah, what is this about, the bankroll?
So this basically, over time, the odds are in the favor of the house. And we didn't really want to be something where we were just the house. And so what we've done is we've given the house pool up to the community effectively. And so you can stake flex into the house pot. And that kind of makes the options more democratic. Some exchanges have these types of options, and they're on the other side of every single trade. And this is really one where we have a take, we have a stake in that pot, but we're not the only ones. So
gotcha. And so, is there a reason I'm not able to do this?
I'm not sure.
Okay, I haven't been able to play with it. So.
Cool.
But yeah, cool. Yeah, that's yeah, cool. Yeah, and as far as like the exchange goes, like there's a ton of shit on here that I don't really understand, but I definitely am trying to. Let's see if we can get this.
I mean, this is a perpetual swap contract. Yep. So what it is it's effectively a futures contract that never settles. So the advantage of futures over spot trading is you have leverage, and so you can have 100 times leverage on these futures contracts. Some people in crypto, especially, prefer very short dated instruments. They want something that looks like the Bitcoin price. They want the aesthetics of matching the price of Bitcoin, and so the perpetual swap is really something that sits right on the price of Bitcoin. It deviates very, very little. And instead, there's a funding payment that happens every 8 hours. There's funding. And our perp is different from other futures exchanges in that it's actually physically deliverable. So you can buy a bunch of contracts and then you can pay for them in dollars and get the Bitcoin. And that kind of comes in advantage for lenders and borrowers and people that want to do physical related trades, OTC desks as well, but a number of different people it's kind of relevant for.
Okay, so if I like open up a long, say at 22,000, and then it goes up to 23,000. Say I put 1 BTC worth of perps, and I click deliver, I just get 1 BTC.
Exactly.
And then so yeah, if it goes down to 21,000, then I still just get 1 BTC, right?
Yeah, and you can always use it for exactly what you want to use it perp for on another exchange. But the advantage on CoinFLEX is, especially in these big market dislocations, on a cash settled exchange, your contract price could trade way out of line with the market. But in a physically deliverable exchange, it's never going to trade that far out of line with the market, because if it does, someone can just click delivery and get the real asset and correct the price. So that arbitrage mechanism keeps the market honest and keeps the market in line in a more efficient way than the cash settlements mechanism does.
Gotcha. All right. Starting to make sense now. Starting to make sense. And so one thing you guys do actually advertise, which is kind of funny, is 250 times leverage.
So that's really on the spread trading. So what you're betting on there, and this is sort of where you talk about advanced, this is sort of advanced. The spread trading is basically the difference between Bitcoin today and Bitcoin futures contracts. Mm-hmm. So it's the perp versus, I think right now you're looking at the June 2021 futures contracts. So Bitcoin 6 months out versus Bitcoin today, and there's $1,799 difference there. And so if you sold that contract and you held it to expiry, if there was no funding on the perp, you would just make $1,799. Now, the reason why that's not free money and people aren't just doing that all day long is because there's funding on the perp. So you're kind of making a bet on where the interest rates of the two instruments are going to be. There's a fixed instrument, which is the actual futures contract itself, and that's trading at a $1,700 premium to Bitcoin. And then there's a perpetual swap, and that's that's more tracking the Bitcoin price today. And so you can bet on these price differences. And when markets go really crazy, these price differences can go really, really sky high. Mm-hmm. So like, for example, our Bitcoin December futures contract, December 21, so 12 months out, that's already trading $27,000.
Yeah.
Wow. So if you look at the quarterly futures, it'll be on there. That's already trading at $27,000. So people are thinking that in December of 2021, Bitcoin's going to be 27K. And if you are thinking about selling your Bitcoin and you don't mind waiting 12 months to get the dollars, this is the best place to sell those Bitcoin. Most people, they want cash today. So that's not really what they do. But there are reasons for these kinds of quarterly futures contracts, and they're really, really useful to some people.
Mm-hmm. Gotcha. Yeah, and I was just playing around with this, and I didn't realize when you sell the spread, you basically you buy, or well, either way, right? You buy the perp and then sell the future, basically, and so
exactly. Yeah, so you're buying one and selling the other. So that's why it's able to be so high leverage. That's why it's able to be 250x, because your risk is actually not that high. Bitcoin could go up $1,000 and you don't get liquidated. It just depends on the movement in the two different prices against each other. So Yeah, it's a bit of a nerdy style of trading, but it's something that's really big in traditional markets, and now it's becoming bigger in crypto. And this is the only place where you can do both trades in one single order book. So, it's really useful to people that are looking to do that.
Yeah. Cool. Yeah, that's very interesting. Very interesting. And so yeah, I would do like, so I think some of the similar exchanges are like FTX. Probably, do they do something similar to this?
No, they don't have this. We're actually the only futures exchange in crypto that has this. I think CME might be another one, but other than that, that's it.
Gotcha. So yeah, the promissory note tokens.
Promissory note tokens.
Promissory note tokens. And so you have them here. And so these were literally launched like yesterday, if not today. And what are they?
Yeah, so this is something we're really excited about. And basically, a promissory note is just a form of a loan. So it's just a loan made between two parties. In this case, the loan is made between a trading firm, usually, but a borrower, basically, that is borrowing money from a trust. And the trust is a CoinFLEX-owned trust company. And it's very standard promissory note loan agreement. So the borrower is just agreeing to borrow, in this case, $1 million at a between 8 and 10% interest rate. And the notes we have right now are for 30 days, but this could be for various time frames. But they're borrowing for 30 days. And what we've done as CoinFLEX is we've taken that loan. We've issued a separate promissory note contingent on the trading firm CoinFLEX promissory note, and we've sold that promissory note to end users. So we've effectively tokenized a loan and sold that loan to the end users. And this is really cool because it's taking the biggest business model in the world, really, one of the oldest business models and biggest business models, which is just lending. Debt markets, tradable debt markets is just absolutely massive business. And we're putting it on the blockchain, and we're also making it tradable. And the really neat thing here is that private companies can now, borrow in a way that has a tradable debt, element to it. And so, there's a lot of these high frequency trading firms, there are market makers, there are hedge funds, there are some sort of sophisticated trading firms, and they're doing things which are very safe in many cases. They're often doing what's called delta neutral strategies. So they might buy Bitcoin somewhere and then sell a futures contract against it somewhere else. They might be doing arbitrage or something like that. And so actually they're doing things that are pretty safe and pretty responsible, but they're prop firms, or they're they don't want to be going through the efforts to be a public company or go through all the all the hurdles to raise money from the general public. And so this actually is a way to give them the tools and abilities to borrow from CoinFLEX's trust, but that trust then goes off and borrows from the general public. And so this is kind of a way to finance the business models of trading firms in a way where, let's say you're a trading firm and you have a business that could make 50% annualized. It's some market making strategy, or it might be yield farming or what have you. And if it can make 50% annualized, you should borrow money, especially if you can borrow it at 10%, you should borrow money to scale that business. Let's say you've done it with all of your own money and you've run out of your own money. Maybe you have $50 million as a prop firm or $100 million as a prop firm. You've done it with all of that money. But the strategy might have capacity for another $200, $300 million before it runs into the sort of mathematical limits, the economic limits of the strategy. And if you have a strategy like that, you definitely don't want to tell everyone. Mm-hmm. So one of the things, there's hedge funds, right? And when you run a hedge fund, you're raising money from the general public, well, not, you high net worth investors, not retail investors, but you're still raising money from other people. And so these prop firms, they're often very, very secretive, but they have these very, very safe, powerful strategies in some cases. Not all of them. You have to do your due diligence. Some of them are, gonna go bust, and some of them are not managing risk properly. But there are a lot of prop firms that actually know how to manage risk really well, and they want to borrow this kind of money. And this is basically a tool to finance that type of activity. And for a token buyer, what they get is a fixed rate of interest. And what they get from CoinFLEX on top of that as well is we're giving an incentive of 30% of the trading firm's fees. So that 30% could be on, tens of millions of dollars a day in volumes.
Right.
And that can jack up the APR, or the kind of interest, the all-in interest rate on these tokens, to much higher than 8 or 10%. It could be another 10% on top of that. So it's a really cool token. It's kind of connecting two disparate markets. You've got these token buyers who don't run high frequency or market making or algorithmically trading firms. And then you've got these firms that have great strategies, but capital is precious resource and is limited, and they want to scale up. And so you've got these two markets that currently have a difficult time interacting with each other, and we're kind of trying to bridge that gap, basically.
Mm-hmm. Wow, that's pretty sweet. And so so here on this page, I have 100 Flex USD that I could buy these note tokens with, right? And so Grapefruit USD apparently already has their million Flex USD. And so Flex USD, which we haven't talked about, gains interest itself, right? Like it's about 8 to probably average 8 to 10% as well on itself. And so, but that doesn't include the trading fees that you would get with these note tokens, right?
Exactly.
And so you get the note tokens 8 to 10%, and then you get your trading fees that you said. And I think I saw you mention somewhere that you can only get those trading fees if you're holding these tokens on SLP, and because these note tokens are going to be based on either ERC20 or SLP, right?
Yeah, exactly. So we're blockchain agnostic, right? And so we really love BCH. We also really love Ethereum. We've launched Flex USD, which, as you said, is kind of our stable coin that pays interest from our repo market. We've launched Flex USD on both Ethereum and BCH. We're launching these tokens on both networks as well. However, the ETH both of them will receive the fixed rate of interest. But if you want to earn the trading fees, which everyone should want to do as well, you need to move it to SLP or just to CoinFLEX once a week. And that fee component will get paid once a week, and you have to move it into SLP or into CoinFLEX in order to earn that. And that's simply because the way we pay the interest on ERC20 is via a rebase mechanism. So it's via a smart contract that increases the balances. The way we pay the interest on SLP is actually via a payment to every single token holder's address. So it's a different mechanism of payment. And the fees are earned in Flex coin itself, and they're also earned in USD. So if we're charging a mixture of fees, we can't rebase in anything other than the in-kind asset. So if you have some Akuna USD or Grapefruit USD, we're going to increase your balance on the Ethereum network. But we can't increase your balance in something else like Flexcoin or like USDC or USD. So because of that, it's just we simply can't pay the fees on the Ethereum network because each payment would be very prohibitively expensive. Ethereum fees are often $2 or $3 per transaction. BCH fees are less than 1/100 of a cent. So we can make these payments very, very easily once a week on BCH, but doing it on Ethereum would not really work out.
Gotcha. That makes sense. And so this Grapefruit one was funded this morning. So when does that APR start accumulating?
Right now. So the first payment will be tomorrow. There are daily payments. The first payment will be tomorrow, I think probably in about 20 hours from now. And they'll get paid every day for the next 30 days.
Gotcha. So yeah, you don't get the APR until it's fully funded.
Yeah, exactly.
Gotcha. And so this says it's ending in 480 hours. That's 20 days.
I think that's actually wrong. So we're running it until about Tuesday at midnight, and then whatever is funded will get converted into the note tokens themselves.
Gotcha. So it doesn't need to be fully funded to get the loan out. Whatever's in there.
No, the initial ones are not structured that way. We may go that way in the future, where especially if we're doing smaller trading firms, we may do it such that if it doesn't have enough interest from token buyers, that it just doesn't end up happening. But for these ones, we thought it kind of made sense to just whatever's contributed gets turned into note tokens.
Gotcha. Cool. Yeah, it's pretty sweet. Yeah, it's like
thanks.
It's because I mean all the rage is that DeFi farming stuff, right? Like farm your USDC on DeFi, and then I think there's like some yield. I don't know. I kept seeing it on yield, and so one thing with the Flex USD, which I already said you can get interest just by holding, which I've done before. It's just like it's literally my Electron Cash SLP wallet, and it, like every 8 hours I get like a SLP transaction like clockwork, and it's like whatever the percent is, say it's $1,000, and then that'd be about like 20 cents every 8 hours. About, I don't know the math exactly, but yeah, it's pretty cool to see that just rolling in your wallet like that. So and then you said so yield on yield. I think this means you can hopefully at some point bring your Flex USD to like another DeFi component and stake that.
Yeah, exactly. So and there's likely to be we're talking with a lot of people in the DeFi space, and there's likely to be several DEXs and DeFi applications that support Flex USD, and there's one that's likely to have a yield farm for Flex USD against note token pairs. So that's something we're really excited about because Flex USD pays a variable interest rate, 8 to 10%, 5%. It kind of it's a volatile interest rate, and then these note tokens, pay this fixed interest rate, and really when you add these two together, if you're either earning one or earning the other, like if you're yield farming a pair that has both of them, then you're always earning interest. And then if you add a farming incentive on top of that, and then on top of that you add, every time people trade against you, let's say it's a Curve or a Uniswap type of DEX, you earn trading fees as well. It's just a way to earn multiple forms of income off of the trading firms, CoinFLEX's repo, the governance token incentives that these farms spit out, and then also just the trading fees that happen on these DEXs. And it really makes sense because if you're a holder of these tokens, you're probably not putting them out on an order book and working orders and trying to make a really tight market, because that's a lot of effort. A lot of the people that buy note tokens and buy fixed income instruments are quite passive folks, and they're just looking to earn a passive yield. So you don't want to work them on an order book and run an API or trade algorithmically or what have you. But with a DEX, with an AMM style DEX, you can just let the AMM do it for you. And really for one-to-one assets, you don't have to worry about impermanent loss that much, because as long as, let's say it's Grapefruit or CUDA USD, as long as those maintain their value at $1 and they kind of trade around $1, and as long as Flex USD stays redeemable and it trades around $1, you're just collecting edge all day. And so you can go to sleep, you can not pay attention to it, and you just collect edge all day from people buying a little bit of your note token and people selling a little bit of your note token for Flex USD. And then if you're waiting to get filled, while you're waiting to get filled, you earn the yield. And so it's a really attractive thing for people in the DeFi space, is these note tokens, these yield instruments, because especially as the governance tokens lose value, if they lose value, you need to be searching for that yield elsewhere. Mm-hmm. And so this is a real sustainable form of yield that can actually replace that. These trading firms, they don't want to just do $1 million. This is just the beginning. We're going to be issuing hundreds of millions of dollars of these tokens, and hopefully more than that as well.
Wow. So aren't these kind of like traditional like bonds, right? Like bonds in regular finance, you like buy bonds from a company to basically like give them a loan, right? Isn't that similar to this? Like, is this legal?
Yeah. So no, it's a great question, and it's one I'm happy to talk about. So one question people have had when we've talked to them about buying these is, well, aren't these securities? How are you guys complying with the law? And securities regulations are basically everywhere on Earth. And how is this okay? And we take compliance really seriously. As an exchange, you have to kind of keep abreast of like everywhere's laws, especially as a global exchange. So the cool thing about law around loans, and specifically around promissory notes, is basically 150 years ago, there's this legal concept of a promissory note in English law. And what happened is they made an exemption over and over again around securities and promissory notes being considered not a security. And Britain basically ruled the world and conquered the world. And a lot of other nations that were former British colonies ended up adopting that kind of framework and that legal framework around short-term promissory notes. So this is effectively sort of an international standard around promissory notes being considered not a security. It's true in the UK, in the US, in Hong Kong, in Seychelles.
So when you say like
a number of
so that word promissory note, that's like a promise that they'll buy it back. Is that what that means?
No, it's actually a promise that they will pay money to the person they're borrowing from. So it's effectively like it's effectively just a loan. There's not that much difference from other forms of lending contracts. It's only signed by the borrower, but it's just as enforceable as any other type of loan, and it's usually short term. So promissory notes are often 1 month or 6 months or even a few weeks. They're sometimes used for person to person or business to business. They can be used by corporates to other corporates, to meet short-term obligations. And really the short-term kind of lending market for corporates is huge. So there's this thing called the commercial paper market, and that's kind of what we're trying to replicate here, using these promissory notes as the way to do it. And so the nice thing about what we're doing is it's relying on an exemption, and it's relying on a body of law that is fairly universally standard. So this is not something that kind of works in one jurisdiction. Let's say it might work in Seychelles, but it doesn't work in the UK, or it doesn't work in Australia or something like that. This is a fairly universal consideration around this type of lending law. And it's also not something that's crypto specific. So a lot of crypto companies face this ongoing problem with regulators where they're dealing with concepts that are new, DeFi, right? Futures exchanges that are dealing directly with retail investors. How do you deal with all these concepts, right? But lending law is actually, the oldest body of law. Lending has been going around for thousands of years. So it's law that's been built up over many decades and centuries. And so there's a lot of precedent for it. There's very little uncertainty. There's no regulatory ambiguity because this is not crypto specific. This is just lending related law. And so because of that, we're really confident in sort of being able to offer this to the widest possible group of potential customers. So that's one of the things that I'm most excited about. This is not something we have to geo restrict very massively or restrict the types of people that buy it.
Interesting. Yeah, because I'm sure banks don't like dealing with this crypto stuff anyways, and so might as well be the bank. Might as well connect people to be their own bank, right? That's kind of funny. That's like the thing of crypto is like be your own bank. Well, if you're your own bank, might as well give out loans while you're at it.
Well, the thing is, if you think about it, when you deposit money at Wells Fargo or HSBC or DBS or something, sorry, it's hopefully not COVID. No, but when you deposit money, they're lending it out and they're doing these types of transactions. And banks actually won't lend. Banks will lend, if you're a prop firm or a hedge fund, banks will lend for FX trading, traditional futures trading, equities, all kinds of assets. They'll lend money to these prop firms. But for crypto, they specifically won't lend any money. Now, we know that the liquidity of crypto markets is enormous. They're 24/7, so you don't have to deal with weekend gap risk, right? The margining is in real time, so the actual end clients can be managed better. There's all these benefits to crypto markets. It makes absolutely no sense for a bank not to lend to crypto markets, but CoinFLEX has been given this magical gift, which is banks don't want to compete in the lending space. So we thought we'd take advantage of that. And we're not even going to be the lender as CoinFLEX. We're saying, we'll set up this trust company and we'll lend out of that, but we want to open up and kind of democratize the access to these loans. And it's really a way to democratize finance, because instead of playing the bank game where we're just collecting this enormous spread between the tiny amount we pay to our depositors and the large amount we lend to end customers, we're just taking the trading fees of these trading firms, and we're effectively taking no spread between the borrowers and the lenders.
Mm-hmm. So how would you guys make money off this?
Well, it's a great question. So hold on. I need to get my charger. Give me 1 sec.
Get the numbers. Run the numbers. How we make money out of this. A nice poster back there. Got Yieldflex USD is yield squared. He's got his chart.
Okay.
First, we need to social distance because you got COVID, so I'm going to go over here.
Yeah, great idea. I'm just kidding. I don't actually have COVID.
And then you're going to go over here. All right.
Yeah, so the way it's a great question. I mean, how do we make money if we're not taking a spread between the borrower and the lender? Well, it turns out being the source of capital for a trading firm is really, really valuable. The biggest thing trading firms need is money. And they usually need more of it. And if they know they can make a certain return on capital, then they want to borrow as much as they can. Mm-hmm. And so our goal here is to really be the gatekeeper of capital and the biggest source and the best source, the most frictionless source of capital for these traders. And then by being that gatekeeper, we extract our tax or our toll, which is, hey, if you want to borrow from our facility here, if you want to borrow from this trust and these note tokens, then you got to trade on CoinFLEX, because the lenders don't just want the fixed rate of interest. They also want this cut of your trading fees. So if you really want to impress them, you gotta trade a lot. And we have these requirements around trading volumes that we enforce for the borrowers. So the borrowers have to trade a certain amount of volume. And then also we have these quoting requirements. So that means sticking up bids and offers and refreshing your bids and offers and actively participating in the market in a way that's helpful, not just trying to exploit it, but also a way that's kind of conducive to building the market up over time. And so
right, just putting that liquidity.
That's really how.
Just putting that liquidity.
Yeah, providing liquidity.
Being a market maker. Yeah.
Yeah.
Gotcha. Cool. What's up, Kieran? What's going on? We're talking about the future of finance, bro. Be a microbank. Loan out your crypto to trading companies through CoinFLEX and get 8 to 10% APR plus 30% of the trading firm's fees. There you go. There's your pitch. Yeah, that's really cool. That's awesome. One thing I was gonna mention but haven't yet. So you have Flex USD, which pays out 8 to 10% APR, and then you also have Flex ETH and Flex BTC right now, but they currently don't have any percent APR. That's just because nobody's borrowing that, correct?
Effectively, yeah. So Flex USD is a collateralized borrowing ability. So really what you're doing when you're lending via Flex USD or when you're
Hello, we are back. Let me get Mark back in here because that shit just went poof. That shit went poof. All right, let me get back in here. We are back though. All right. Hello. All right, we're back.
Woohoo! Awesome.
Okay, so yeah, we'll back it up here, get restarted, reset, and so yeah, the Flex BTC and Flex ETH. So there's no APR because nobody's borrowing on the thing, right? You were saying something about the APR rate can't go negative, so why wouldn't you do Flex BTC?
Huh? Sorry.
So you said the APR can't go negative with that, so. With the Flex BTC or Flex ETH. So why wouldn't you turn your BTC if you're just holding it to Flex BTC?
Oh, yeah. I mean, you should do that if you want potential for extra yield. I mean, the only risk is just counterparty risk. So you have the risk that CoinFLEX blows up. Now, one thing I'm really excited about is BTC and crypto denominated PNTs. The first round is all USD denominated, but we actually, in the last few days especially, have had a lot of demand for BTC denominated note tokens, so the promissory note tokens. I think some of them will pay 5% or 8% or 10%. And that's really not the kind of return you can get in a lot of other places. And it'll be the same type of concept. So the 30% of fees sort of thing will apply as well. So I'm pretty excited about that. I think those are going to be popular too, in addition to the obviously the USD denominated ones.
Okay, so yeah, you would get Flex. So would you get just Flex BTC and then like essentially stake it or buy these note tokens, or would it?
Yeah, exactly. So we're kind of building off of everything we do is kind of integrated with everything else. So. On the Flex, on the BTC denominated note tokens, you'll get paid in Flex BTC. Yeah.
Gotcha. So yeah, just hold your BTC, but stake it and get, like you said, probably 5 to 7% off your BTC. That's pretty sweet.
It'll depend on what the borrowers and what the token buyers want. I mean, this is going to be a based interest rate. But from my understanding of where the borrowers and where the token buyers are, I think that's totally achievable.
Gotcha. That's is there any way you can like actually like kind of stake your BTC like that? I think like maybe BlockFi I've heard of. I think something similar.
Yeah, there are some lending companies and kind of companies like this where you can do that. The difference is really that when you lend to one of those, you're getting, they have clients on the other end, and you don't know exactly what's going on in the other end, and it's just one company. Here, you're actually getting very specific individualized exposure, and usually the other types of lending businesses will just give you exposure that comes from either futures basis or lending to trading firms or something like that. But this is getting you the added benefit of the trading fees. So that's really a source of yield that these kind of BlockFi and other types of businesses don't have because it's not a futures exchange. And then, CoinFLEX can provide. And, a lot of these types of businesses, actually, I think it's very collaborative. We want to work with these kinds of lending desks. We'd love for some of them to be buyers of these note tokens. And I think some of them will. And really, it's, our goal here is we want to dominate the borrow lend space, but we want to do it collaboratively. So we don't want to just say, hey, like, you should use us and not BlockFi, or you should use us and not Celsius or something like that. We know that they often have more capacity. They're just getting so many retail lenders. There's so much volume that's going into them in terms of actual assets. Maybe they want to offload some of that. Maybe they want to use some of that and buy no tokens. And so some of those types of institutions will come on. There's hedge funds, there's family offices. Lots of people are searching for yield. This is a world where interest rates are basically zero, some cases negative. The Fed is kind of buying bonds. And what that means is in the US, the actual prices for bonds are like, the yields on bonds are going down and down and down because firms can borrow at lower and lower rates. So how do you get access to good rates? Well, you go to the people that don't have access to Federal Reserve money effectively. And it's these prop trading firms that can't borrow from the Fed, or it's people that are trading crypto, where banks that have access to Federal Reserve funds and can borrow at some of the cheapest sources. Banks don't want to lend to the crypto world. They don't want to help that liquidity grow. Maybe they're too scared, they're too paranoid, there's political reasons, maybe, but for whatever reasons, they don't want to do this. And so, that's where I think the demand will come from. It's these people that are dollar holders and Bitcoin holders, and they're kind of looking for higher yields than they can get elsewhere.
Gotcha. Cool. Yeah. So if I get Flex BTC or Flex ETH, can I withdraw that as a SLP token?
Yeah, you can withdraw it as an SLP token. You can hold it in your wallet. You can get the interest while you're holding it in your wallet. And you can trade it on exchanges that support it, and it's great.
Is that the first fully backed BTC token on BCH?
I think, yes, it is. Definitely. And
this is the new way to use Bitcoin.
Yeah, it is. It's the cheapest. Actually, it's also the cheapest fee way to use Bitcoin. So there's wrapped Bitcoin on Ethereum,
right?
But really, Flex BTC is much cheaper to send than wrapped Bitcoin on Ethereum. So this is the cheapest way to send Bitcoin.
So ERC20 wise, when it comes to Flex BTC, it's cheaper than wrapped Bitcoin? Is there like less smart contracty stuff going on?
No, sorry. I mean,
you
Flex
mean
BTC on
right.
SLP.
Right. Just use Bitcoin. Yeah, SLP is Bitcoin Cash layer 2. Yeah, sure, go
Bitcoin
with that.
Cash.
That's a good narrative to start going. SLP is just layer 2 on Bitcoin, but it's layer 1, damn it.
Exactly. Yeah.
That's funny. Just tokenize me completely. All right. Yeah, we could tokenize myself on SLP. Be cheap to send.
We can tokenize anything.
Tokenize anything on SLP, man. SLP, as long as it's backed. That's the thing. As long as it's backed. So yeah, one question I did have about this actually. So, say one of these trading firms like defaults, right? Like say they don't pay their. I know you said you're gonna like do a secondary market for these $1 notes, right? What if the notes go to zero?
Yeah, they can, and buyers have to be aware of that, and we want to do our best to make buyers aware of that. There's no yield without risk, right? Mm-hmm. So if someone's offering you a rate of interest, you have to think, okay, where is the risk? What could happen that would mean I will not just lose my yield, but I'll lose all my money. Mm-hmm. And based on the risk of that happening, maybe I should moderate how much I put in. So the first thing when you look at these note tokens is be aware of that. And the thing that could cause this is these are algorithmic trading firms, right? So the algos go wild, and maybe something wrong happens. Now, if they're a long established trading firm, they'll have manual humans monitoring this 24/7. They'll have decisions that are both automated and algorithmic, but they'll also manual decisions, and they have years of experience, and they have a capital buffer, which is money that they've saved up and made in profits and balance sheet. But it could happen. Black swan events happen all the time. And if a trading firm is on the wrong side of one of those black swan events, they could go bust. And the thing we would do is we have a loan agreement with these firms. And so if there are assets there and we're able to, we're going to, sue these firms and go after them in the court systems and the traditional systems. We also have the right to sell the underlying loan in the case of a default and try to recoup it from someone who may have a better ability to go after the firms. But ultimately, really in the event of a default, it's most likely because the firm is actually bust. And so, there is absolutely the risk that these tokens go to zero. But yeah, we would do our best, like any sort of lending business and any kind of trust company and any type of setup like this. We would do our best to go after these firms through the courts and through arbitration systems and court systems. And if that was successful, anything we're able to recoup from that would be offered as a redemption value on the actual tokens. And if ideally we're fully successful and we can redeem them at one. But yeah, defaults can happen. They will happen. Don't put all your money in note tokens. If you are looking to put large amounts of money in note tokens, diversification is good. Doing lots of due diligence on these firms is good. These are all public names. You can look them up on Google. If you know the owners, you can ask the owners or the traders or the employees at these firms. There's lots of things you can do to get comfortable with them, and yeah, you should be careful. But that being said, there's the risk and there's the reward, and we're trying to provide something that's kind of an honest product, very transparent about what both are, and if you decide to buy, you're kind of buying that risk and entitled to that reward.
Mm-hmm. Yeah, cool.
Yeah.
Some cool stuff. Let's see what else we got in here. Margin. And so I was playing around with it, and so you can post your collateral by just having basically any type of funds in your account, right?
Yeah.
So okay. So yeah. I mean, the only other experience we really had with these leverage type things was from BitMEX a while ago. You play until you get wrecked basically on Mex, right? And so that was BTC only, but here, for example, you could deposit your BCH and use that as your collateral, right, for any of the markets.
Yep. Yeah, you can deposit BCH and then trade ETH perps or whatever you want to do.
Right. So yeah, that's cool. And so yeah, as far as that physically delivered thing, you guys are the only exchange that does that?
We are the only one. There are two regulated US ones that do it as well. That's Backed and ErisX. We are the only non-US exchange to do physical delivery.
Nice. And that means Mark shows up to your house and hands you a Bitcoin.
Yeah. Yeah, exactly.
Yes.
That's how it works.
You just have to pay for the plane tickets.
Yeah, it's physical. I can tell you, running a physically delivered futures exchange is exhausting. You're just constantly flying all over the world and giving people Bitcoin.
Here's your Bitcoin. Bye bye.
Here's Bitcoin. Here's Bitcoin. Okay, now I fly somewhere else.
Oh, somebody pressed a new button.
Thank God it doesn't work that way.
Yeah. If you didn't catch the joke, obviously, physically delivers means when you're inside of a. I'm learning here. You're inside of
an account.
You're inside of an account, like you say, you're in a trade of a futures contract, and say you made 1.5 BTC. You can click the deliver button, and instead of trading out back into USD, you get your BTC.
Well said. Exactly.
All right. Yeah, I think the Mike tried to explain that to me when he was on the show a while ago. I was like, I have no idea what that means. I was just nodding my head yup. Somebody says we should flip start Mark a nice microphone. Oof.
Oh no, is my mic bad? I can also switch.
No, it's fine. I've heard way worse.
Is this any better?
No, it's worse.
It's worse. Okay, I'll switch to what it was before.
Nah, it's fine. It's
Cool.
fine. It's fine. Yeah. I guess anything else you want to shill at this point? I think we went through most of it.
No, I think this has been great. It's been really great to be on here, and yeah, no, thanks for having me on the show.
Of course. Any questions for me?
Not really. I mean, yeah, sorry.
Damn.
Thanks for the time.
Yeah, of
Really
course.
appreciate it.
Of course. Thank you. Silent Musas in the chat says, "Mark, make us all rich."
Sounds good, guys.
That's CoinFLEX's goal, just to make everybody rich. You didn't know?
Yeah, we really just want to provide products that can help people make money and kind of give people the risk and the exposure and give people what they want. So that's what we're passionate about. That's what we're interested in. We really like interest rate markets. We like borrow and lend markets. We think they're going to be huge. In kind of traditional finance, like the over collateralized market is like usually 25% of the market cap of the asset. And so that's like that could be $100 billion today. And then the unsecured markets are absolutely massive, absolutely enormous. So that could be way, way bigger than that today. And we just want to help crypto grow and help the markets grow and provide lots of tools that will make that happen.
Cool. Well said. All right. Thank you so much, Mark, for coming on the show. Learned a lot. CoinFLEX is awesome. So, again, thank you. Thank you, everybody, for watching. Y'all have a good day or night, whatever it is in your time zone.